Welcome back. Let's talk about Tilaknagar Industries. Why is that? Because news reports suggest that Andhra Pradesh is likely to bring in a liquor policy similar to the Telangana one, where retail liquor businesses will be handed over to private parties. To understand this, the impact of this new policy and get an outlook on the business for that, we have Amit Dahanukar, who's the CMD at Tilaknagar Industries, joining in. Remember, 85% of their revenues do come in from the southern part of the country itself. Thanks a lot, Amit, for joining in. The regulation question out of the way. One, how much of your sales actually come in from Andhra and Telangana? And were this policy to be announced, basis what you're hearing, what could the impact on players like you be?
So at the outset, thank you for having me on the show. We're very pleased to be here this morning. So we have, as you mentioned upfront, about 85% of our revenues do come from the southern territories. Andhra and Telangana account for around 50% of our total revenues, with Andhra Pradesh being around 30%. So with the change of government, with the recent elections, which concluded in June, we have been expecting, in fact, the government has made an announcement that there would be a new policy effective October 1. So we are also curious as to what this new policy would be. But going by the track record of the leadership, we do expect it to be fairly progressive, which will be forward-looking, for the next 5 to 10 years, and will provide a level playing field for all national parties as well. So we are quite optimistic as to what the policy would be. But to really elaborate on the contours, it would be too premature right now.
Amit, good morning. Thank you so much for joining in a hypothetical scenario. If this policy does come into place, what kind of an impact would that have on your company's volumes? And if you can couple that up with the overall business in general for the current quarter, what are the kind of trends that you're witnessing on the volume front so far?
So just to put it in perspective, I think in the last 5 years, if you see the 2019, when there was a regime change in Andhra Pradesh to the exit volumes in 2024, we see that Andhra Pradesh hasn't really grown in terms of the overall market opportunity. There hasn't been much change in the Andhra Pradesh market in terms of volume. Whereas in that same period, if you see, Telangana would have significantly grown, huge change in the Telangana business opportunity, whereas Andhra has remained stagnant. And we see no reason why, that should have been the case. So I think it would be fair enough to say that if there's a policy which provides a level playing field for all participants, is progressive in its outlook, there have been talks of perhaps privatizing the retail trade as well, though I think they're unconfirmed reports. We can't say with any level of uncertainty. Currently, the route to market is that the shops in Andhra Pradesh, they're government-controlled, government-operated, whereas the on-trade business, which is the bars and the restaurants, of course, that is private. There have been murmurs that the trade could be privatized, and I think the opportunity could be fairly large. So
Right.
but really to quantify what type of impact that would be, it's quite difficult to say. But
Got it.
Andhra is one of our key markets.
So for one, to make a reasonable comparison, you did allude to the fact that from the exit of the government change, Andhra has remained stagnant, whereas Telangana has seen a big growth.
Yes.
Right. So what is the delta between the two, if you could give us a sense, over the last few years?
So I would say if the Andhra growth has been largely flattish, whereas Telangana would have grown probably mid double digit over a 5-year CAGR.
So if, this does come by, would it be safe to assume that given the base difference, etc., growth in Andhra could be, say, high single digits or lower double digits as well over a 5-year CAGR?
Yes, we would certainly expect that. We would certainly expect that with the right support and the right infrastructure, the right policy, we would, I think, certainly expect that. The leadership has been known to be progressive. I mean, going by past record, we have seen that the leadership has been progressive in terms of its outlook towards industry as a whole. I'm not specifically mentioning the liquor industry, I think, but quite supportive to industry as a whole. So we can be fairly optimistic at this stage.
Coming back to the question that I had asked you, Amit, earlier, what are the current volume trends that you're witnessing in this quarter? And is there a target that you have set to end the year with as well?
So I think we would end this year with, a double-digit growth. I think that's what the expectation is. Of course, the quarter one, in fact, in quarter four itself, we had given guidance that, owing to the ensuing national elections and state elections in Andhra Pradesh, growth would be muted due to a lot of policy regulations and restrictions during that time period. So Quarter one for us was largely flattish, but I do expect it to recover also. At the current time, one must understand that while the new policy is going to be announced, there's a lot of flux and uncertainty in the market, which is continuing even now. But I think long term, the trajectory looks very positive. I think a month or 2 months, here and there could be some minor hiccups. But if you look at a trajectory, say for a 5-year period, I think we are very hopeful.
Mid double-digit growth is what you targeted in terms of volumes, and value would be about 300 basis points higher than volume growth. So should we see somewhere around 18 to 20% sort of revenue growth for this year, given how things are?
Yes, revenue growth will certainly outstrip the volume growth. I think that's been the trend. I think that's largely due to the product mix and the state mix also, which we have run. So I do see that to continue in this year. And we'll have margin expansion also. In fact, the first quarter margins itself was around 14.5%, which is typically it's our weakest quarter. It's usually typically the beer sales are very high in the first quarter. Our sales are little sluggish compared to the remaining quarters. So, going by that trend, I do expect that 14.5%, which we have reported for quarter one, that will kind of form a base now.
All right, so 14.5%, this is ex-excise. The reported margins are close to around, ex-subsidy, the reported margins are close to around 16% right now itself. Just a final question before we let you go, with a promise to join us back once the policy is announced for a much detailed conversation. Your product mix is something that you alluded to. Going forward, currently about 94-95% of your revenues come in from Brandy. Going forward, what is this mix likely to be, say, over the next 1, 3 and 5 years? And in Brandy as well, flavored Brandy, Flandy as you call it, has been gaining some traction. So how much would that account for in your overall sales?
So Flandy, I think now in the states where we have currently launched it, it accounts for around 10% sales of the mother brand, which is fairly good now. Entering the second year of launch, it's something which we're quite happy of, something we're quite proud of, the progress it has made. In the next 1 to 3 years, I think, the Brandy volumes will still dictate the growth which we will have. I think there's a lot which we are currently planning to do also in terms of Brandy, in terms of certain new launches and new flavors which we plan to introduce. So Brandy will continue to dominate our product portfolio for the next 1 to 3 years. But if you take a longer term horizon, say the next 5 to 7 years, I do believe that we would look at opportunities and flavors other than Brandy also, strategic opportunities, tactical opportunities, geographic-based opportunities. So we'll be quite selective and guarded in terms of our foray into flavors other than Brandy. But yes, I mean, the company now is moving September. By March 25, we do expect to be net debt-free. So we will have, cash generation, which will allow us to subscribe to various growth opportunities in categories other than Brandy as well.
So you're looking to make inorganic acquisitions in the second half of this year, is what we've read from what you've said so far. Though I know you won't comment on specifics and say that we're always on the anvil and looking for some opportunities. We'll hear from you and also speak to you once the policy is announced. Not too far from now, you're saying October 1. So we'll get you back on the show. Always a pleasure speaking with you.